We're going to move on to our next panel now on disruptive innovation. Along with David, who will join this panel, we're also welcoming to the stage Marjan Delatinne, the Global Head of Banking at Ripple, and Eddie Lee, the Regional Director of Operations for Asia Pacific at Revolut. Thank
Charlie,
you.
thanks very much. David, thanks. Fantastic speech. I want to pick up immediately on something that you said, that you said that regulators don't stifle innovation. I want to see if my two panelists agree with you. Let's start.
Definitively.
You can speak freely here. You're among friends. Okay. No, do that. I mean, that is one. And how does regulation keep pace with technology? Technology is changing so rapidly. There's a fundamental question that comes up constantly. But are regulators supporting FinTech and innovation, or are they seen as potentially stifling it or an impediment?
Well, I think depending on the markets, the approach is different. And when you're talking about a technology like blockchain, which is completely disrupting the way that the financial industry is working, it takes time. It takes time because it's about education. Regulator needs to understand what does it mean exactly. And I think we spend lots of time working with the regulator to make sure that this is not disintermediating completely the financial players. It's about bringing efficiencies and probably changing the way that the cross-border payments, at least from Ripple perspective, is happening. And this will bring ultimately values to the users. I think this dialogue is very important. And to be honest, at the end, and we had the same discussion with David, I think what is important in any regulatory framework is around consumer protections. And when we are talking about money, already there are existing frameworks for protecting consumers. And is why we cannot reuse that and align that with what this new technology will bring as a shift. So I think this, in order to continue this dialogue, it's very important that all the different factors are understood, and from our side, we welcome this dialogue, and we continue to have it with many different regulators around the world.
Okay, Eddie, again, the Revolut view.
On our end, I think that short answer is I do not think that regulators stifle innovation. In fact, I think that on our side, what we have seen is as we begin to expand our footprint around the world, actually a very proactive and transparent discussion with the regulators is actually really critical. And so, we are trying to build a global infrastructure and a business that actually can serve end users in every market. And to do that, understanding and actually having the discussions with each regulator to understand, okay, here's what we have. How do we then make the adjustments to be able to work within the regulatory design that you foresee? And then we need to then ensure that we are able to demonstrate that before we really go live. So if you look at Singapore, we've been privately testing with very close consultation with MAS throughout to let them know, hey, here's what we're seeing, here's what we're doing, here's our risk system, et cetera. And actually walk through this entire process quite extensively. And I think that actually has allowed us to actually set up for scale much faster than having to not have that discussion, not be able to open that regulatory discussions, which I think ultimately pays dividends.
So David, thumbs up from the two disruptors here. But MAS almost serves a business development role as well, though, doesn't it? So you're not the typical regulator.
No, so I fully accept that we have a bit of an unfair advantage that we do have a developmental mandate. However, conversing with fellow regulators around the world and central banks, it's something that perhaps is acknowledged. And I wanted to add also is, and perhaps it's a bit of a shocker, we as regulators, we don't know everything. And especially when talking about the tip of the spear when it comes to technological solutions or services that we do offer, it is really that dialogue. It is really about an understanding of what is trying to be achieved, how it's trying to be achieved. And yes, there will be difficult questions because at the end of the day, we are hardwired to ask difficult questions and to look for when things go wrong. But it is about a mutual and self-learning effectively.
Marjan, let's now talk about the relationship between FinTech and banks. That's an important relationship. Is that changing? Is that landscape changing?
Well, I think it's obvious that banks can no longer ignore fintechs. And we see that certain moves in very large incumbents like Visa, MasterCard, moving towards new business models because it's a question of survival at this stage, how they can shift the way and the business model in order to be competitive enough. I think there are different dynamics. We see that in Europe with regulatory initiatives such as open banking, and the fact that the monopoly of the data is out of hand of the banks. There is no longer we can work with or we can collaborate. You should collaborate with the FinTech, because this is basically the ultimate value to the consumers. At the same time, I think changing a bank is very difficult. And we see that some of the banks are creating a new banks, actually, like RBS. But you still need to change the bank. And the budgeting of the banks are different. When you look at the top 3 banks in really global banks, universal banks, the budget is billions, but this is 50% more of the budget that the European banks can handle. So when you are in these kind of struggles and you want to be more disruptive than be disrupted, you have to work with the FinTechs, because otherwise you might be disintermediated. From blockchain perspective, I think if you are still at early stage, I should compare that with the 90s, where there were so many different shiny business models, and finally, those who had a real, a viable, let's say, or they were trying to solve a problem, they survived. And I think this is what is happening now in the blockchain space as well. Our use cases around cross-border. So, and cross-border has structural issues. Cross-border is at the end the ultimate leg of any trades. There are funding issues, pre-funding, and this has a cost to the industry. To a certain extent, it goes to up to 10 trillions. Our capital is actually tied up in the accounts in order just to make sure that the global trade is happening. So, yeah, I think there is a value, and we see more and more existing financial industry understanding this value.
When I was speaking to Stuart earlier, he said organisations like Revolut are a big risk to retail banks. Do you see them as your main competitors, or other tech as your competitors?
Well, I think I'll combine your first question around the regulator piece and this together, because I think they're heavily intertwined. For me, I think we're still very early in how we think about companies like Revolut. Yeah. And I think I personally think that maybe if I'm invited next year, maybe I'll give you more detail, we'll know better. But each country is having different designs as to how they think about e-money and the companies like ours coming into space. And I think so. For me, what we have seen in UK, given that e-money regulation has been there a bit longer, is that we are actually a great partner to banks, right? I see ourselves as a player that ultimately exists to serve end users, and how we do that to be a global network doesn't always mean that we have to compete with banks to be able to create that value proposition.
So partnerships possibly...
I think it's quite critical, actually, because I think that for us to be able to serve the customers like we intend globally, we need partners who actually understand local climates and are actually able to work and be able to set us up to be compliant in the initial to long term. And then it's one of those things that I think I consider, when we first started in, let's say, 2015, many of the banks viewed us as a pure competitor. But I think what we have now seen in the dialogue that we've evolved to is that, in fact, Revolut can be an incredible acquiring engine and partner with banks to be able to essentially make the relationship more in depth, and also better customer experience at large.
David, I spoke earlier to Stuart about this as well, the McKinsey report saying that banks that don't adopt FinTech risk becoming footnotes in history. What's the MAS view on that?
Well, I don't think banks will become a footnote in history, but perhaps how banks are. Because if you think about it, and one of the nice quotes is, people need banking services. They not necessarily need banks. What definitely is happening is the introduction of the FinTech players and as actually very rightfully put, is addressing a service. What I think it's now posing for the traditional players is thinking about, are they able to compete with respect to those underlying services? Whether they provide as an underlying backbone infrastructure, where partnerships may happen. And you rightfully may see some banks saying, we're just middleware, effectively. That was going to be our service as a utility. Some may fully saying, well, we can't participate as much because of margin, because of the capabilities, legacy of technology, let's say in the retail space. As mentioned earlier, we'll move to corporate. Some may fundamentally reinvent themselves as a more FinTech-like organization. So I don't think there'll be a footnote, but definitely there will be change in terms of how they look and how they operate.
Marjan, blockchain, you talked about it. We talk about it often. In a conversation in Hong Kong last week, and some of the tech space said to me, well, stop talking about blockchain because it will just become the norm. Are we at that stage, or are we at an inflection point where that would be the case?
Well, the way that we see it, this is probably me talking and my opinion, I think it's far still to become mainstream, but norm, I think the fact that it is bringing efficiency, it is decreasing costs, and it's changing completely the way that at least the payment side is working.
Yeah.
Yes, it's become a norm. But still, in terms of adoption, there are two major factors that are very important. One is regulatory clarity, and we see that as long as the markets are open and there are clarification around it, there is no question. So the players adopt easily. But for the markets that they don't have this clarity, there are still, hesitancy. And the second important part is the ease of implementation. And I think this is something that we have learned, that you cannot just plug a new technology without thinking about legacies.
Yes.
And I don't think that's still a lot of work. I think there are still lots of works to be done to make sure that this new technology can be embedded into the incumbent's world. So, yeah.
Yeah. Okay.
Could I jump in? And I just want to pick on that point about regulatory clarity, because I couldn't agree anymore. And going actually beyond blockchain. And what you're kind of finding is that there's also a change in both the regulator's approach towards regulatory clarity, because think about the traditional operating of a regulator. Okay, reminds me of Little Britain. Computer says no, or it is for you to make your own risk assessment. Rarely do you find the regulator saying, yes, do this. But there's more and more need in terms of providing a perhaps non-prescriptive understanding of feasibilities of what can be done. For example, what we mentioned earlier about data connectivity, the use of technology, solutions, and how it can be used within organizations. The most, I guess, for us, systematic one that happened about 3 years ago is when we openly said in no ambiguous term that cloud can be used. So do believe there's a necessity of, as part of the dialogue, in having clarity in how this kind of exploration can be done. Of course, mitigating risks, understanding situations, taking care of whatever governance needs to put in place, but understanding the feasibility and how to navigate and how to, where necessary, one can actually innovate.
Okay. Again, happy to involve the audience. If you'd like to ask a question, make a comment, please feel free, put your hand in the air and we'll bring around the microphones in just a moment. But Eddie, I want to put something to you. Talked about it earlier, the lines between tech and FinTech are becoming blurred. I refer now to Uber Money. Before you joined Revolut, you were with Uber for 6 years, something like that. They've suddenly gone from ride-hailing to being a disruptive FinTech company. So do you see those lines becoming more blurred? And perhaps if we have this conversation in a year or two time, we won't be talking FinTech, we'll just be talking tech.
I think it's very possible. I think that when you look at players like, you see it here with Grab and the companies as well. I think they're essentially trying to close the ecosystem that they've created and create that. But I think, coming from the marketplace technology side and now going to FinTech, there's so much that you don't see that allows companies like Revolut to serve our customers in a way that government feels comfortable with. Where I think that the work that we have done, I think, is not so easily closed, where I think from an end user interfacing point of view, that the services that are provided by Uber Money and et cetera can be felt similarly. However, to do it the way that allows you to scale and able to serve customers in a way that actually interacts like a financial institution, I think that the two will stay relatively separate is my current point of view. Okay,
but it comes down, there's also a regulation piece in this, isn't there? Yeah. So how do the regulators play an Uber Money equivalent, where a big tech's getting into FinTech?
Yeah, absolutely. A key change that already happened is kind of looking in terms of activity. So, smells like a duck, walks like a duck, quacks like a duck. I don't care what you call yourself, it's a duck. Yeah. So I think that's a very clear indication, because at the end of the day, and that goes back to the point I mentioned earlier, we should not see innovation and governance regulation as, no, I need to do everything to avoid it. In the end of the day, as a company, as a service provider, you want to make sure you're providing a service that's safe. That's the purpose of governance and regulation, is to assure safety and not just one self-governing themselves.
Okay, let's open up now to questions. Again, stick your hand in the air and down there, please. If we can get a mic to the gentleman there.
Thank you. Henry Gao from Singapore Management University. I have a question for Mr. Hardoon. Now, You mentioned data localization and the adverse effects this could have on the development of the digital economy. But with the size of the population of some countries like China, they have large enough data, and if they adopt such policy, then it could be beneficial to the indigenous firms. So I wonder what should firms in Southeast Asia, which are much smaller in size, do in that case? And also, I was wondering if you could update on the status of the Global Trade Connectivity Network, which MAS announced 2 years ago in collaboration with Hong Kong. But I haven't seen any updates yet, even though it's supposed to be established this year. Thank you.
So perhaps I'll start in reverse. And for the latter one, what I'll say is wait for next week. We have a lot of stuff coming out, and I won't be surprised when some of the topics will be on that as well. On the first one, I fully recognize, and in fact, listening to the earlier panel, with obvious ambition that may be out there by certain larger countries. But we need to start in terms of what is the objective we're trying to meet. And if we go down this path, which unfortunately we already have, there's quite a number of smaller countries who are saying, well, the big boys are doing it, we're going to do it as well, we're going to localize our data. It is inherently detrimental to local companies as well as global companies, and naturally the people which are consumers within them. So what I'm saying is that, yes, it is a difficult, but what's important is identifying on how to create data connectivity that is fair, reciprocal, in understanding to making sure that in the end of the day, how do we make sure the services that we're trying to achieve can be fulfilled? Now, granted, if your country is so big, it's an economy in its own right, nothing much can be done about that. But in the end of the day, we're operating in a global world. We're working, the heritage of Singapore as a trading post. We are not just the mailman, we're making the connections, we're making the relationships, we're providing the services, we're facilitating. And it is important for us to be there, which, by the way, as we speak as now, there is no data localization requirements in Singapore. So it's already the de facto. In fact, the majority of the world doesn't have data localization requirements. It's just they don't say it because they're like, it's the reality, just go ahead and do. It is the countermeasure by saying, no, to achieve security, we need to localize. To achieve privacy, we need to localize. To achieve growth of the economy, we need to localize. Where it's a strong belief that this is not the case. We can achieve all of those. Growth of local economy, existing trade agreements will have certain nationalistic interest to them. Privacy, protection, security, these can be achieved without a draconian overarching kind of no data can leave the country, no data can leave the shore. Because at the end of the day, if I want to make a payment and that information can't cut across, can't have the service. So we actually go back in time in terms of feasibility.
Well, Marjan, the data nationalization issue must be very high on your agenda and a risk to your business growth.
Of course, the way that we work is we are not changing actually the way that the processes is happening. So whenever we go in a certain market that we are new, we adapt to the local jurisdictions, and the first dialogue is with the central bank to ensure that this is understood as a new software that the bank needs to develop. So we are adaptive into how the existing financial industry is working. Now, a question of the data, I think, of course, it's going beyond that because we see that there are certain contradictions between, at least in Europe, between what is GDPR and what is the open banking. Yes, and none of these laws yet are very clear in terms of how the coexistence needs to happen. So we try actually to manage these contradictions, but at the end, the owner of this new technology is the banking or the financial industry or the institution, and we adapt to that.
Okay. You've just launched in Singapore, just opening up here at Revolut. Yes. Is the Singapore view on data and openness of data, was that a factor in your decision?
Yes, it's very important for us. I think that GDPR is definitely high standards, and I think PDPA is also of very high standards. And I think that on our side, we actually care a lot about this topic because it's part of what is to be secure. Yeah. And so I think that we want to make sure that we are able to play again with the rules that are established for those countries and do it in a way that makes the local government feel comfortable. And so I think that on our side, it was just another part of the hurdle that we had to clear to prove to ourselves that we can actually operate in an environment like Singapore, which is obviously very open, but also very clear about what you can and cannot do, and then allowing a company like us to exist.
Okay, another question from the audience now. Have any more? Please, over there, sir. Oh, where's the microphone? Over here, please. That lady there, and then we'll go to that gentleman there.
Hello, everybody. Vivian Wang Davis from Royal Mail. My question is about AI. I think many leading scientists around the world have warned us about AI technology. The most striking comment by the latest Stephen Hawking is it could be the worst event to humankind. So I just wonder, in the banking and financial industry, how the AI technology is shaping the industry. And building upon that question, I also would like to hear from you, how do you see we should balance between embracing the AI technology at the same time to really be conscious the impact on our social life and on the consumers as well? Thank you.
It's an existential question, but I'll try and answer it in short. I'm sure you've seen the recent panel between Elon Musk and Jack Ma. Elon Musk, again, is having a very similar, it will be the end of humanity. Jack Ma, it will actually be the salvation of humanity. I'd like to take a more centralist, pragmatic view. And anything we do, how it is used and how it is applied has catastrophic effects. Look at this atom energy, nuclear weapons, and so forth, vis-a-vis how it's been used in medical and so forth. So we need to take a pragmatic view. And the way I like to answer it is when I actually get this question of, when is AI going to take over humanity? It is how we think about it. My perspective is actually thinking it from the very origin as augmented intelligence, not artificial intelligence. And what I mean by that, if from a research point of view, from an applied perspective, an operational point of view, our goal is to replace the human. As in, I want the machine to be able to make decisions. I want the machine to save my headcount. I want the machine to do that. Then if we reach a point in time in the future whereby, shock, oh shock, the machine has replaced the human, well, there's only one person we should need to be at fault. It is ourselves. However, if we start with the objective and the goal by saying it is to augment us, it is help us in making decisions, it is to help us into making process, we be entirely pragmatic that it would result in displacement. It will result in some of those events, but fundamentally, it is meant there as a mechanism, as a tool to help us. So yes, there are risks, don't get me wrong, but it is the approach in which we take to navigate between them. And it's that starting point. So in the financial sector as well, and how we kind of engage the industry is to think about it as a mechanism, a tool to augment us.
Okay. We're just about out of time. I want to ask one final question to you two. A lot of the early FinTech players were designed to improve the efficiency of existing services. I think we've moved on from there now. So what is the next phase? New services, new interactions? This is both of you, but I'll start with you first, Marjan.
Well, I think from really the use case that it is essential to Ripple, I would say when we think about the cross-border payments, the major part of the cost, as I mentioned, is the way that the pre-funding is happening. So you pre-fund accounts around the world, and some large banks, of course, are making revenue out of that, but many cannot, and this is a cost for, let's say, the global economy. The way that we have seen that is how you can change this way. It's not replacing existing fiat currencies, but it's looking at, especially exotic currencies, that the pre-funding and the risk exposure to FX is more and more important, how you can address this. And so we have a product which is called on-demand liquidity, and rather than pre-funding in the destination country, you can source on-demand liquidity. So imagine you are a payment service provider, you want to send $100 to Mexico, and you use actually our native digital asset, which is called XRP, as a bridge currency between the two fiat currencies. So changing from USD to XRP, and immediately after to Mexican peso. But this is really revolutionizing actually the way that the money is handled. Because today, FX and the transfer of the money are not happening at the same time. And this created lots of exposure, especially to low margin organizations. So in MoneyGram, for instance, is a case that went live recently. They are using this solution in a few markets, as I mentioned, more exotic markets like, for instance, Mexico, Thailand, and they see already a great efficiencies and decrease of the cost in the way that the treasury and liquidity management is happening. This is still, of course, needs to be more commercialized, but this is really shifting the way that we are thinking about transfer of the money as compared to what is today.
Okay. Final point to you, Eddie.
Yeah, and I think for me, and I'm still a new entrant on the finance space, so I look at this slightly more by analogy at the moment. My impression is similar to how e-commerce has brought into retail, essentially globalizing, but then at the same time distributing the value creation within that globalized infrastructure. I do think that finance or fintech's doing similar within the world of finance, where we are essentially adding on the platform layers and the specialty layers within that, like Ripple, that allows customers to get the most transparent and the most cost-effective solution, and they're given the awareness, the choice, and the immediacy that they previously weren't able to get. So I think that in that regard, I think it's just only greater pressure for everybody in the market to continue to not worry about margins, but worry about customer value, and be able to say, okay, are we evolving to drive customer value in the most cost-efficient manner possible? And I think that's going to be no longer compromisable in the future.
Eddie Lee, Marjan Delatinne, and David Hardoon, thank you very much.
Thank you.